April 26th, 2024. Today was a pretty difficult day for stop order traders for the most part. Something to notice early on is a lot of the big bull bars, pretty much all of them, 7, bad follow through, 13, bad follow through, 17, bad follow through, 27, bad follow through. And then later in the day, 62, bad follow through, 66, 68. So while all these bull bars were probably reasonable, all the bull bars today were just not getting good follow through, 42. And so not as good as the other trades, but still, or not the best because it's high in a trading range, but still okay to buy betting on the breakout. But my overall point being, a lot of the really good bull bars today and the really big bull bars ended up getting poor follow through. And that's something you have to notice. And that's one of the signs that today's going to be a trading range day. So difficult day for stop order traders. I actually thought yesterday was relatively, it sounds weird, but not that great for stop order traders who are particularly picky, which is what I am. I didn't think that I didn't really want to buy any of this. And, the only buy I considered taking was right here, or early in the day at least. Consider taking was right here. But you're at the top of this tight trading range. I wanted to wait for follow through and a bull bar closing on its high. And we just never quite got the bull bar closing on its high. And, we obviously had open gaps, which were really important. We had this one. And then, this one. So when you have open gaps, obviously, the market might just rally. But I thought really hard to buy here after 4 straight bear bars. I thought, this is okay, but then you're going to exit here and, doesn't really trigger anything here. And then it's kind of hard to buy that after this. And you can buy that, but just difficult, I thought, yesterday. And a lot of times on the days that are more extreme, I find it's a little more difficult. Like, this day, was a bit difficult for stop order traders. It just really extreme patterns. Basically what I'm saying is when the patterns are really extreme, a lot of times, a lot of traders just step aside. And I thought a lot of lower probability things happened yesterday a couple of times, which is what created the rally and made it continue to rally so much. If that made any sense, but probably didn't, whatever. Anyways, bar one, a bull bar closing on its high. Good for the bulls. Probably getting a second leg up after the big bull surprise yesterday afternoon. Followed through for the bulls on bar 2, so still really solid for the bulls, but we'll see how much higher we go. Generally, I thought the upside was relatively limited today, and that was because of the daily chart. This is a huge bull bar, but it's too big. The risk is really large buying above that bar. So in my mind, I thought we were going to hit 5150 because the low of this was relatively important, but we actually ended up keeping that gap open so far. I do think we're going to get to the low 5150, so the April 12th low, since bulls bought below there, and they should be able to scale in and make money. But we did not reach it today, which I was relatively surprised by. But usually when you get this big bar with big risk near the moving average, traders are going to look to be more eager to buy a pullback. So, I think we'll probably get back to the April 24th low, the low 1 low, and retest it. So not sure how bullish I am over the next week. We'll see what happens Monday. But generally, we needed 2 legs up, and we did get the 2 legs up. However, look at the size of those 2 legs. Does that make you think that, and considering, how large this rally was, do you think that this is the start, this right here is the start of a big bear trend or the start of a trading range? It seems like it's the start of a trading range to me. So I think we have found the bottom of the trading range, which was 5,000. I initially thought it was going to be more up here. Obviously, I was wrong about that. But we found the bottom of the trading range, which was 5,000, and the top of the trading range is obviously way up here, 5,300. We might form a trading range with the sell climax high of April 15th. But in general, I think we're going to be in a trading range here for a little while. So I guess that's the daily chart, but I thought the upside on the day was relatively limited. Followed through for the bulls on bar 2, but not quite as good as it could be. Inside bar on 3 and an inside bar on 4. So we have an II, it's a triangle on a lower time frame. An okay buy above 4, it's a high 1, but early in the day, so hard to trade. And then follow through on 5 towards yesterday's close. But then you get 6. It's a bull micro channel to bar 6, so I wouldn't sell below 6, but I think a lot of bulls are going to exit below 6, thinking we might end up getting a little bit of a sell-off here. Big outside up 7, but it's 3 pushes up, 1, 2, and then 4, 5, and then 7. And it's a breakout of yesterday's high, good for the bulls, but I'm not sure how much higher this is going to go. And that, is kind of reflected on the big doji bar on 8. And 8 is really an important bar. You can see what it did is the traders who sold below 6, they scaled in higher above the high of the day. And then when 8 traded back to their entry price, they sold, or they bought back their shorts. But the fact that it even gave those traders a chance to buy back their shorts after a bar like 7 tells you that this might be a bit more of a trading range day than a trend day. Follow through for the Bulls on bar 9, but it's not quite as good as it could be. Big tail on the top and disappointment on 10. 11, a bull bar, but a big tail on the bottom. So again, I don't think as good as it could be. It's a high one for the Bulls, but this looks pretty climactic. I think we're probably going to get a top relatively soon here. And then a big disappointment bar on 12. 12 is Bulls giving up. Do you sell 12? I wouldn't. It's a parabolic wedge, yes, but I think the bull channel is really tight. And yesterday's giant rally into the close makes me think we're going to be more sideways. There are probably buyers below 12 and probably sellers above 12 if we get up there. But in general, I'm expecting 2 legs sideways to down, so I wouldn't buy 13 either. I think the bar, it's a huge bar with huge risk, and you're buying kind of in the middle of a tight trading range, or I guess you could say the upper part of a tight trading range. So I would just leave 13 alone. Traders, you can see they were more eager to buy a pullback, maybe a 50% pullback of 13 than they were to buy above it. And even then, they were probably scalping. 14 is a low one short for the Bears from 12. You're looking for another leg down. You know that 12 was strong enough for a second leg, and you might be getting it here on 14. Follow through on 15, but not really that good. And you can see, what are traders doing, right? If you bought above 13, you're disappointed 14. You're using 15 to exit. If you sold the close at 12, you're disappointed 13. You're using, the sell-off to exit. So really, strenuous if you're taking these kind of stop order trades and really tough management. And even if you have perfect management, you broke even. So if you were quick to get out or you scaled in. So really not as good as it could be for stop order traders today. 15 or 16 is a high one. It's a bull bar, and we're probably going a bit higher, but you don't really want to buy up here. When you don't really want to buy up here, but you think we're probably going a little higher, what should you do? Probably look more to buy below the bar. So I thought buying below 16 made sense today. Outside, and we also haven't had a close below the moving average. So if 17 is a bear bar closing near flow, you just get out. 17 outside up, big bull bar. We're always in long. It's big bull bar closing near its high. So okay for the bulls, but right at a sell climax high, the 12 high. So I'm not sure it's really ideal. If it doesn't end up triggering. I thought it was okay if it triggered to take the buy for always in, but the upside, like I said, probably limited. However, we do have an open gap here. And at the time with bar 12, we had an open body gap with 6 and 12. Or sorry, at the time of bar 17, we had an open body gap here. So I thought okay to take the buy above 17, taking a chance that we rally, but then you get this on 18 and it never even triggers above 17. So I would rather just not. A rally on 19, but a big tail on the top, showing that anyone who was long, just using this to scalp out of their trade, and then a reversal down on 20. 20, a failed breakout of the 18 bar range. Always in long bulls are going to get out below 20. And I thought a reasonable sell, actually. But within, 2 minutes of 20, triggering, it was right here at the moving average. And so you're sitting there with 3 minutes left in the bar, and you kind of have to ask yourself, what makes more sense? To just take profits now? Because what's going to happen in this next 3 minutes? Seriously, do you think that this is going to turn into a giant bear bar closing way down here? It's really unlikely that that's going to happen. What's more likely is that if you give this bar 3 more minutes, it's going to get bought up and all your profits are going to disappear. And you don't have any true risk since the market went straight down. It's not like it went down, rallied, and then went back down. It just vacuumed straight down. So I thought, okay, to just take profits if you were short. And that's probably what caused part of 22. 23, a second leg down for the Bears. Am I selling 23? I'd probably try and wait for follow through, and you never get it. You can see disappointment 24. We're forming a tight trading range here. We had the failed breakout above the 18 bar range, so we're still technically on the sell below 20, but I would personally be out. 20, 24, like I said, just sideways here, 25, 26. 26, an inside bar, a bull bar closing near its high. I think okay, maybe to buy above 26, but I'd just rather wait. And you get big follow through 27. Really good bar 27, but I'm probably going to wait for one more bar. The reason being 19 and 20, strong enough for a second leg, or strong enough for a lower high. And so I'm probably expecting a lower high. I'm ready to be proven wrong if 28 is another big bull bar. Even if 28 looked like 37, it's probably still an okay buy. I'm probably taking that. But when you buy 27 and then you see a doji bar as your follow through on 28, yes, it's a bull doji and it is the minimum follow through. But I think a lot of traders are going to wait and try and see one more bar, because bulls who bought above 27, they're taking a chance that we rally, but they know 27 could be a bull trap. This whole thing was forming a triangle, and we're in a pretty tight trading range. So traders are looking for a breakout of it. How big was this day? Just for a second, I'm just curious. 30, 40 points. Okay. We're forming a triangle, and traders want a breakout above it. Obviously, the bulls do, and the bears want to break out below it. Bulls want the breakout above to reach 5150, the magnet, and bears want to fill the breakout of the 18 bar range to stay on the sell. The closes below the moving average on 23 was really important, in my opinion, because I thought that meant that the bears had a little more control than the chart might show. So I thought that 27, there's more reason for me to wait to see if 28 was good follow through, and it wasn't. When 28 is not good follow through, you can see what happens when it touches the 27 entry price. Those traders exit, causing 29. 29, probably good enough for a second leg down. 30, high one, but not that good. Probably buyers below, probably sellers above. And then 31. You can see, again, like all the other bars, it was probably better instead of buying above 12 to try and buy below 12, which you would have, or above 13, try to buy below 13. And instead of buying above 27, you try to buy below 27. It didn't quite trigger on 27. But the overall point being you can't buy above 13, put a stop below 13 and let it get hit. That's just really not a good thing to do. If you're buying above 13, if anything, you need to buy more below 13 during 21. So kind of one of those things. It's a bit difficult management if you're going to trade it like that, which is one of the reasons why, you shouldn't take the buy above 13. 32, it's a high one, or a high two, depending how you look at it, but it's not really that good. It's a doji bar. This is a triangle to me. I'm going to wait for a breakout with follow through. 33, a bull bar, but not ideal follow through. And disappointment, 34, 35, 36. 37, a bull bar closing near its high. Yes, we're always in long. Yes. So I think okay to buy above 37, betting on the breakout, but I'd rather wait for follow through. Thought 38, okay buy. I would ideally like to see one more bar, but I still think okay to be long above 38. Disappointment, 39. And then an inside bar high 140. You can take the buy above 40 or 41. Probably stop below 39 or 38 is fine. And then 42, more follow through for the bulls. Again, I thought we were going to vacuum up to the magnet, but instead we get disappointing follow through 43. And then 44, closing near its low. I thought these trades did something interesting. So a lot of times the market will try to do something twice, and then the third time it'll fail. And I thought there were two really good examples of that today. So bulls, they were long above 42, disappointed at 43 and 44. And they'll exit if we trade below 44, but they bought the close hoping to start to create a vacuum up to that magnet of 5150. And then you can see fit 45, okay, and then a second reversal down 46, but they bought the close again thinking they still had a chance to get up to 5150. And then 47, the last chance for the bulls, and then they got disappointed in 48, and so they just decided, okay, I'm done with this trade. And a lot of them exit below 48, and that's why we traded below, rather than, you can see they kept buying the close, kept trying to make it work. And I thought the same thing happened here. We were trying to form a buy the close rally. So we got, a bull surprise 62, which I was not expecting that big of a surprise, but we got it. That's why it's a surprise. And then big outside up 66. Do you buy above 66? You probably can. And then you get disappointment 67. So what do traders do? Well, a lot of them buy the close hoping that we're going to get a bull bar, which is exactly what we get, 68. So traders see 68 and now they're thinking, oh, well, Initially, I was disappointed with this, but now we have this, and it's closing above the 66 high, showing the traders who bought above 66 were disappointed in 67, but they bought more at the 66 high. They didn't sell out. So maybe we're going to rally now. So they thought we were going to rally here. Now they're hoping we're going to rally here. And then we get 69 and bulls exit, but they're not fooled by 71 anymore. Now, traders aren't willing to take that chance. They've taken the chance twice and they've been disappointed twice. Same here. The traders have taken the chance twice and they keep scalping out and they're disappointed twice. So the third time, they're done with it. They're not willing to do it. And I thought the same thing with 71 here. Traders not willing to buy 71 because I thought, well, now this might just be a third push up and this might just be, some sort of nested wedge. So I thought more likely here that we were going to go a little more sideways. And then what did they want to see out of 72, right? Like I said, they wanted to say, prove it to me, show me follow through. And they needed 72 to close on its high, and it was disappointing. And that's why 73 happened, because anyone who was buying was hoping 72 was going to close on its high, and it didn't, and so they just sold, and that's a bull give-up bar. And it ends up forming a head and shoulders pattern, 19, 50, and 72, or a truncated wedge. It's the same thing, whatever you want to call it. But yeah, I think that, that's my, a good example of the market failing to do something twice and then doing it the third time. 50, I think, a bear bar, but a tight bull channel, so I would rather not buy. And then we get a trend line break 51 and a lower high major trend reversal 53. Very credible sell on 53. Small bar too, good for the bears. Follow through for the bears 54, tail on the bottom, but okay to sell. Right at the moving average though, so I might wait. I thought 51 being so big was really important. 55, another bear bar, 3 straight bear bars, but not quite closing on their lows, 54, 55. So something a little bit wrong with this. And then an inside bar, low one short, 56. A doji bar 57. We are always in short for sure from 54 and 55, and we are still on a credible sell below 53. So I thought 57 was actually probably a credible sell. I should have put a box there, but I did not. And then 58, good sell 58. You can see bear bar closing near its low. We're always in short. Sell 58, put a stop below the lower high, which is the 57 high or 56 high, however you want to look at it. Because on a lower time frame, I know it's a micro channel, but on a lower time frame, that's forming a lower high, 56, 57. 59, 60 doji bars, so not good follow through for the bears who sold. And then we get a big bear bar 61. Bears are hoping for a vacuum test down to the bottom of the channel, which is probably about the 23 close where the bull channel started, or the second leg. We had the first leg up from bar 1 to bar 17, and the second leg starting at 23. And instead, we get disappointment 62. Do you buy above 62? Well, I think it's kind of like buying above 27. Probably better to try and buy below, or like 13. Probably better to try and buy below 62 than above. And you get a doji bar 63. It's technically follow through for the bulls, but it's not really what you wanted to see. Disappointment 64. A lot of the bulls who bought exiting, maybe they bought a 50% pullback, scaled in and scalped out. That would be a reasonable thing to do. Yeah, so 64. They see they bought down here and they scalped out up here around the close of the bar. And then 66, big outside up. I think 66, important bar for the bulls. We kind of had a surprise on 62. I was not expecting 62. But then we got it. And so bears have to exit. And then we see 66. And instead of a sell the close finish, traders are thinking we might get a buy the close finish. 67, more disappointment, but then a bull bar closing near its high. 68, an okay swing buy. But then disappointment 69, bear bar closing near its low. You have to get out. And I would not buy 71. It looks like a third push at the top of the channel. If you do buy 71, 72 is tough because it doesn't close on its high. So I think really difficult here. And then that's why bulls exit, causing 73. And then some traders will sell 73. I thought 73 was credible, but it's really late in the week, late in the day. So I'd rather not take it. So stop orders 4. 7's probably fine for always in. 20. I wouldn't trade this. I think after 12, we're going to get another leg sideways to down. So I would leave this alone. I probably thought 17 was okay, but it never triggered. So 20, I would not buy 27. I would rather wait. 37, 38, 40, 41, 42, 53, probably the best trade on the day. 57, 58, and then maybe 66, 68, and then 73. We have 2 days left in this month. And, the Bulls doing a good job putting a tail on the top. They're going to, again, be trying to keep this open gap with here to prove this is a bull trend. And we're rallying towards the next magnet, which is probably around 6,000. And yeah, it'll just be interesting to see how this month closes. Bulls want it to close above the midpoint. And so I think that is what the big fight will be over. We are around the midpoint, which is 51.53. Roughly, this is not perfectly accurate. Just check it on your own chart. And I would watch the midpoint of the week to be a big magnet Monday and Tuesday. Yeah, that's the day.